So I was asked to make the connection between raising taxes on the wealthy and raising workers' salaries. How do those two things interplay? And it's really quite simple. We have to give the rich a choice, the business owners a choice. You either pay the tax man or you pay your workers. That's your choice. Now, look, this whole theory is based on the assumption that nobody wants to pay tax. Rich or poor, nobody wants to pay any more tax than they absolutely have to. If people start loving paying taxes, well, then this whole theory goes to shit and we're going to have to figure out something else. But for now, we're going to work on this assumption that nobody wants to pay taxes. How does this whole thing work? What am I talking about? See, there's a distinction in personal income tax and business income tax a lot of people don't seem to understand. Our personal income tax is taxed on our gross revenue, the amount of money that we take in total, and then we get certain deductions that we can take depending on how we use that money. Businesses, on the other hand, are taxed primarily on their profits. And this list here is a list of all the most common fully deductible business expenses, including certain legal fees, wages paid to employees, employee benefits programs, equipment costs, office expenses, maintenance and repair, office leases, etc. Basically, any money spent in making money is deducted from the tax bill before the tax is calculated for businesses. So rich people that own businesses that don't want to pay tax have a very easy way to avoid that tax. Pay their people more, which increases their wealth because they'll have more productive employees, they'll have lower turnover, so less time training new employees, and they'll also be increasing their customer base in theory because their employees are also customers, which means that they'll have money to go out and buy the stuff that they're making. So again, this all goes back to this basic assumption that people don't like to pay taxes and they're not going to pay any more than they absolutely have to. So if you raise taxes on the wealthy and you tell them, look, you can either keep that big profit for yourself and pay a huge tax bill, or you can put that money back into your business and deduct all of that and not pay taxes on it, most people are going to choose to put that money back into their business, which is very likely to lead to higher wages. And while this is just a theory, it has happened in the past in the United States in the 1950s, 60s, and 70s when the middle class was growing.